Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is May 20th, getting close to the end of another month here. Almost half the year gone already. It's going by fast, they always do. We're going to take a look at Chubb today. It is out of the financial sector. This is actually one that Warren Buffett just recently added to his portfolio, and it's also one I looked at a couple years back that I probably should have added to mine, but did not at the time. I was into more of the oil stocks at the time that everyone was running away from, but this is one that I looked at early on whenever I started my portfolio. So let's jump in and take a look. If you are new to the channel or would just like to help me out, if you would take a moment to hit that thumbs up button down below, if you find any value in the content, make sure you're subscribed to the channel, hit that subscribe button, join us on this journey to financial freedom, join the Vested Interest community, hit the notification bell so you're notified whenever we put out any new content. I do the stock pick of the day videos Monday through Thursday, so drop a comment down below. If you have a company like Chubb you'd like me to do a stock pick of the day video on, I can work it into the rotation on a day it pulls back. Really appreciate everyone who's taken the time to do that. It does help with a small YouTube channel like mine to get the word out. Pretty close to 1,000 subscribers, just over 900 now, trying to get to 1,000 subscribers and then beyond. So doing all that does really help me out, and again, really do appreciate it. This is the Vested Interest Stock Screener. This is how I set up the stock pick of the day videos. It's also how I look at a company on a high level to see if I'm interested in investing. And just because it meets 5 of 8 and 6 of 9, with this being a financial company, we will add in price to book here. So it must meet 6 of 9. Does not necessarily mean I'm investing in the company. It just means it goes into my watch list. Then I do more of a deep dive into the financials and figure out a price to pay for the company by doing a discounted cash flow analysis, and then wait for the price of the stock to align with that price estimate that I've set up. Again, we're going to run through this at the end of the video. We'll see where it sits, whether it meets 5 of 8 or 6 of 9. We'll see that. But let's jump in and run through the screener. And we will start with the business. So if you want to know more about this company, check them out at www.chubb.com. That's www.chubb.com. That is their homepage where I pulled this information from. And they are an insurance company. That's what they really do. From your home and automobiles to the people you love and care about most, you have a lot to protect. You need the level of service that comes from working with a premium insurer who specializes in successful individuals like you, whether it's for personal insurance, business insurance. They have home, auto insurance, valuables, boats and yachts, cybersecurity, liability, travel insurance, natural disaster, bespoke services. I'm not sure exactly what this is, but it must just mean whenever they go through, similar to your valuables, you might have some different things that you bought over the years that you want insurance on, right? But overall, they're in the insurance industry. That's what they do: life insurance, health insurance, or life insurance. I don't think they do health insurance. I think it's more around, personal liability insurance and life insurance here. Now, the reason we're taking a look at them, down 3.7% on the day. We are talking about Chubb Limited, ticker CB, out of the financial sector. Closed out the day at $264.14. Looks like they're up a little bit in the after hours, at least whenever I pulled this information here. You can see a big drop through the day, right? Pretty much a sell-off throughout the whole day. 52-week range, as low as $183.71, as high as $275.41. So they are up against their 52-week high. Love for more of a pullback on this one. Market cap of $107.257 billion, beta of 0.63, less volatile than the overall market, 1 being the market, anything above 1 being more volatile, anything under 1 like this one being less volatile. Price to earnings PE ratio is $11.74 per share, though again, for financial companies, that's not a great metric to look at. Might be a little better for a company like this. Definitely not one we want to look at for banks, right? PE ratio for banks is not good, but I'm not so sure that in the insurance industry, that PE might not be a decent one to look at. Low PE either way. EPS very high. Earnings per share sitting at $22.49. One of those rare cases where the earnings per share is higher than the price to earnings ratio. Next earnings date coming up sometime between July 23rd and July 29th. For dividend is $3.64. They are quarterly payers, so divide by 4. We'll see it here in a little bit. Dividend yield a little lower than I like, 1.33% starting dividend yield. Obviously, if it pulled back closer to their 52-week low, you could get that a little higher. Ex-dividend date, June 13th. Looks like they're going to pay out July 5th. And 1-year target estimate, at least according to Yahoo Finance, $270.10 per share. So they see some slight upside in the stock price here on this one, though not much. And it wouldn't quite get back up to its 52-week high. Now we're going to jump over to dividend yield theory. To do that, if you were to go to Yahoo Finance, where I pulled this information from, go over here on the left of the chart, you'd find some tabs that you could click on: financials, statistics, a couple others. We're going to go into the statistics tab, go down to dividends and splits. We look at their 5-year dividend yield average of 1.83%. We compare it to its current 1.33, or over here where it says forward 1.33, same number. Since it is lower, that speaks to overvaluation on this one. So according to dividend yield theory, this one is potentially overvalued. Payout ratio very low. I like 75% or lower. They're sitting at 15.29%. So they have a lot of room to increase this dividend over time, pay down debt, make acquisitions, reinvest back into the company, and obviously cover the dividend. So a lot of free cash flow room here to cover the dividend and continue to increase that dividend over time. Now, looking at price to book, again, for financial companies like banks, you typically want 1 being fair value, anything above 1 being overvalued, anything under 1 being undervalued. I don't know if that's really a great metric for insurance companies like this. This one is currently 1.84, and you can see here, you can use price to book this way as well, showing, if you look back here, right, March 2023, they're at 1.59, 1.49 in June, in September 1.61 in 2023, December and 1.75, and here in March 2024 even at 1.77. So every one of these is lower than the current 1.84. That means it was cheaper, right? That means it was actually a better buy here in any one of these quarters. So really, if you were buying it back here in June of 2023 at 1.49% over the last year and a half, that is really the cheapest point right there at 1.49. That's another way to look at price to book. You can compare the current to where it has sat in the last year and see if it's overvalued or undervalued compared to itself. Now, if you wanted to do a real analysis, you'd compare Chubb to other insurance companies like this one and see what their price to book is, and then that would give you a better metric. But right now, according to dividend yield theory and in its own price to book, it's a little on the high side, right? Now we're going to look at free cash flow. We want growing free cash flow over time, because typically if a company has growing free cash flow, they have growing dividends to match. Going back to 2020, you can see here 9.7 billion, 2021 up to 11.1, 2022 up to 11.2, and 2023 up to 12.6. Very nice, steady growth in the free cash flow, as well as repurchasing a lot of their own shares. You can see here 523 million, 4.8 billion. Though 2021 to 2022 does look like a bit of a drop, because they had a big repurchase of their capital shares at 4.8 billion here, and then down to 2.8, and their free cash flow was pretty close to flat, 11.2 versus 11.1. So you could actually say from 2021 to 2022 there was a bit of a drop in free cash flow if you add in the repurchase of capital shares, because that's what they're using to buy back shares, free cash flow. But then right back up at 12.6, as well as pretty steady on their 2.4 billion repurchase of shares here in 2023. So overall, from 2020 to 2023, nice free cash flow growth. Now jumping over to stockanalysis.com, this is another site that I like. So Yahoo Finance is one, stockanalysis.com is another one. You pick any sites that you like. Just make sure you're not blindly just following one site. Sometimes the information they present is off or not up to date. So I always recommend more than one source, at least 2, if not 3, to make sure the information you're getting is accurate and up to date. They have 19 analysts that have taken a look at this. They call it a consensus buy, though it is on the edge of a hold. If you were to go to stockanalysis.com, of the 19 analysts, you'd be able to click on each one of these, see how many might be calling it a strong sell, a hold, a buy, or a strong buy. Overall, there are obviously more calling it a buy or a strong buy than calling it a hold or a sell or a strong sell. They are right on the edge of a buy. They're calling it a buy. I, again, think this one might be a little bit overvalued right now. It did have a big run up after it was announced that Warren Buffett bought into this one, so maybe after the excitement of Warren Buffett adding a new position to his portfolio wears off, this one pulls back a little bit. Low estimate of $240, which would be a 9.14% decrease from where it currently sits. Average estimate of $269.89. That would be a 2.18% increase from where it currently sits. Pretty close to that now. And a high estimate of $294, which would be a 11.3% increase from where it currently sits. All the while, you could collect that 1.3% dividend yield if you were to buy it now. Now we're going to jump into statistics, look at financial efficiency of the company. How well are they reinvesting their funds back into the company? To do that, we look at return on equity and return on invested capital. I like 10% or better for these metrics. Return on equity sitting at 16.5%, above the 10% I like. Return on invested capital at 12.68%, again, above the 10% I look for there. EPS growth, I like 5% or better. They're only at 1.58, so not looking to expand their earnings per share growth very much, though they already have a pretty high EPS that we saw 22 point something there in the one of the first slides. They do not have revenue growth forecasted, so EPS does not meet the 5% I'm looking for. But so far, other than the current evaluation on this one, or stock price on this one, I think the numbers look pretty good actually. Let's jump over to the dividend. Again, they are a quarterly payer, very low payout ratio. They're saying 16.17. Yahoo Finance had them in the 15 range. Either way, I like 75% or lower. So they are very low on the payout ratio scale. Dividend growth in the low single digits, 4.18%. Not bad. I'd like it a little bit with such a low payout ratio. I'd like to see a little bit more growth, but that's not bad. 32 years of growing the dividend. Buyback yield of 1.87%. That's positive. That's good. Shareholder yield of 3.24%. Very good overall. Now, going back to 2020, here you can see they were paying 80 cents. They raised it up in June 2022 to 83 cents, June 2023 up to 86 cents. Most recently here, they're looking at a raise in June, excuse me, up to 91 cents, which will pay out on July 5th. They do pay out on the January, April, July, October timeframe. Not a lot of companies do, so I do like that. And maybe that's why Buffett was looking at them. I'm not sure exactly what he paid for. I'll have to get into his 13F and see exactly what he paid for his shares. But right now, I think they're a little overvalued. Dividend yield theory says they're potentially overvalued. Price to book, if you're using the standard one being fair valued, there's a little overvalued there. And even compared to where they've sat in the last year or so, they're a little overvalued. So I would look for more of a pullback on this one, maybe be a little patient with this one, though it is one I looked at, like I said, a couple years ago. As we were in COVID, coming out of COVID, it was pretty cheap, but I didn't know exactly what was, and that was probably the best time to be buying a lot of the insurance companies because they probably had a lot of payouts they had to pay out because of COVID. But it is what it is. We can't buy them all. This one is interesting. I just want more of a pullback on this one. And looking at the stock screener here, you can see understand the business, check. Growing free cash flow over the last 4 years, check. Growing dividend, check. Payout ratio under 75%, very low payout ratio on this one, check. Dividend yield theory says this one is potentially overvalued, so no check there. That would be the one I would wait for it to come back into, right? The dividend yield theory say it was potentially overvalued, and that would give you another check. Buy below current cost basis or within 15% of a 52-week low. That's where I'd wait for it. And return on invested capital, return on equity greater than 10, or the industry average is greater than 10, so we got to check there. Earnings per share growth was not 5% or better, so no check there. And at price to book, it was potentially overvalued, so no check there. Overall, it meets 5 of the 8, but it's a financial company, so we need 6 of 9. So it doesn't quite meet what we're looking for a financial company. Again, I would wait for either the dividend yield theory to come back into line or for it to be within 15% of its 52-week low. And I believe if it's within 15% of its 52-week low, you'll also get dividend yield theory to kick in as well, and that would give you 7 of 9. So this one, I would just wait for more of a pullback and a cheaper price on it if you're interested in this company. Let me know what you think in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And again, let me know what you think down below of Chubb. Is it one in your portfolio? Is it one you're watching? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, I do these stock pick of the day videos Monday through Thursday. So if there's a company that you'd like me to do a stock pick of the day video on, let me know in the comment section below and I'll work it in. I do have a request for Dole. I will get that out eventually. Just give me some time. This is one I wanted to look at since they just recently announced it was one that Warren Buffett had added to his portfolio. I thought we'd take a look. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. You can read the rest of this, but don't be blindly following anyone on social media, Yahoo, YouTube, Twitter, any of the other places out there that you get information. Make sure you're doing your own due diligence and doing your own investigations into these stocks.